What is up, YouTube? Welcome back to Stacks by the Numbers, and I wanted to take a look at the stock that apparently exploded from 3 cents up to, I don't even know, $4 or wherever the hell this thing went. Name of the company, Faraday Future Intelligent Electric Incorporated. Say that 10 times fast. Ticker symbol FFIE, listed here on the NASDAQ, at least for now. Stock right now trading at $1.12 a share, down about a quarter of a point. Right now about 19.5% from where it was. And first of all, on the technical side, we could potentially make the argument that we did have this big spike up, and now we're kind of channeling down here into the flag. So, of course, in the fundamentals, in my opinion, the stock looks basically unconscious. But you know, that usually means that we pop it from $3 to $4, and then we're probably going to take the next leg higher. Who knows? So maybe it'll go to 6 or something. I have no idea. But in my opinion, the company should be out of business, as of course, just like all other EV stocks that basically started up around 2020 and 2021. They sucked all the kids in. They took all that stimulus money in, and this company hasn't even produced a car, I don't think. Someone mentioned in the Discord, I think they made 10 cars. So, you know, it's been about 4 years, and they made 10 cars, and they lost, of course, hundreds of millions of dollars along the way. So now they got rewarded with this massive pump, and I'm sure even further dilution and cash and capital raising may actually be coming, since the company is probably going to run out of cash inside of the next 1 to 2 quarters. But we have a market cap here of about 47.5 million. We're losing $180 per share. We have a beta of 18. Again, the beta is the volatility of the stock in relation to the overall volatility of the market. So, of course, with this big volume coming in and these big swings, you know, the beta obviously went through the roof. The EPS side has been basically horrendous, even though somehow they came in more narrow than Wall Street expected on these losses for Q1 and Q2 of 23, and then of course a wider than expected loss here in Q3. The company hasn't even reported since then, but for some reason, again, the company is gaining some momentum, and I appreciate the fact it's a short squeeze and you guys may have made a nice return. And listen, if you bought this thing at 4, 6, 28 cents and it exploded to $3, $4 a share, again, as much as people may want it to go up to 6 or 18 or wherever the heck the next price target is, you know, in my opinion, when you see these massive percentage gains, if the stock eventually tops out, potentially does another reverse stock split, or issues more shares and dilutes and goes back down to where it came from, and you're still holding, then unfortunately, you know, not to beat you up, but unfortunately you would have no one to blame but yourself. Now, again, I appreciate the strategy of basically buying a zombie company that should be delisted and should go out of business and kind of forcing like 1,000, 10,000% return for yourselves. I do appreciate that. But again, that's why I have to remind you guys, bulls make money, bears make money, pigs, they get slaughtered. And I know a lot of people may jump down my throat when I speak about this company, but I also direct your attention to another EV stock called Mullen Automotive, MULN, which I basically said was going out of business and wasn't worth your time, energy, or attention. I direct your attention to Fisker Automotive, FSR, I believe the symbol was. That company is essentially donezo as well. And then, of course, let's not forget about Lordstown Motors, ticker symbol RIDE, which, of course, went bankrupt just like FFIE should be going bankrupt. But, of course, you know, a lot of people are now potentially saving this stock from getting delisted and going out of business, as it should, right? So this is essentially, if you really think about it, if you guys remember 2008, 2009, I don't know if you were trading or investing at the time, depending on how old you are, but essentially what happened was you had companies like AIG basically loading up on the credit default swaps and getting heavily invested into the real estate market, and then of course it all went to hell and everyone began foreclosing, and then they got screwed, basically left holding the bag, and we, the taxpayers, had to write a check for over $700 billion, followed by quantitative easing, of course, through our Federal Reserve, to help pump the markets back up and help save AIG. And I appreciate the fact that they were talking about how it was going to enter into a massive depression, so it was too big to fail, and we had to save the company and all that nonsense. But at the end of the day, the beauty about capitalism is if you don't know how to manage or operate your company, or your product and your services is not popular and it doesn't sell and people don't want it, or you're outpricing your consumer, then at the end of the day, the strong will survive and the weak will dwindle away. So that's what really grinds my gears about a situation like this. So again, it's a zombie company in my eyes. It's essentially a stick in the mud, and it went on this massive explosion. So again, anyone who was involved, congratulations. But again, at the end of the day, you essentially just saved a company that has been screwing over shareholders for 4 years straight. The company generates essentially no revenue. It is massively overpriced from day one, as you see, but everyone obviously bought in and continued to hold in the downtrend. The company went through multiple reverse stock splits, as you see here, 1-for-80 reverse stock split back at the end of August of 23, and then only about 5 months later, another reverse stock split, 1-for-3 here in the beginning of March of 2024. And obviously, if this random pump didn't happen, the next reverse stock split, in my eyes, probably would be happening sometime soon. But also, in the short term, again, we could pop up here out of this potential bull flag riding off of the technicals. But in my opinion, I mean, look at these numbers. The chances are the company's not going to bring in $2 million, as they haven't brought in $1 since going public in 4 years, remind you. So chances are it's probably going to give back the gains, drop back to sub $1 eventually, and then guess what? Another reverse stock split will probably be incoming. Again, this is NASDAQ listed company, so they have to maintain that dollar plus level for, I believe it is 10 consecutive days. And of course, the stock was down to sub 4 cents for several weeks before this random explosion happened. But again, I mean, if you got in and you're up, then of course you don't want to hear something like this. But in reality, again, I just remind you of the GameStop situation that just took place, and of course the AMC situation that just took place. Two corporations that, again, in my opinion, you can make a very strong argument that these companies should be going bankrupt and are potentially on their way out of business. And they both consistently get saved by you guys forcing these short squeezes. And then as soon as they gain some momentum, what do? Well, they bleed you guys for even more money to line their pockets and help themselves and protect themselves at the company and pay for their, compensation packages. And obviously you had companies like GME and AMC almost immediately offer more shares and crash the stock back down because, of course, you just handed them free millions and billions of dollars. So, of course, they're going to take it. I mean, they don't deserve it and screwed everyone over for 4 years straight. But, hey, why not, let's just force the short squeeze and hand them a couple of million. But, hey, I'm getting off track here. For the record, I do not have a position in FFIE. I did not buy at this extreme low. I have not recently bet against the company. I have nothing personally to gain here. This is just my opinion. This is not financial advice. But I love this article here from Barron's a couple of days ago. Let's see if we can bring it up for you. Faraday future stock is soaring again. The machines are in control, says Barron's.com. Faraday future, wild ride isn't over. Shares are soaring Monday. Incredible week. Shares are, look, at $3.90. Ooh, but they closed at $1.03. Okay, that's quite some swing. Severe drop, recent meme stock madness. Shares were, and I love how they compare it to the S&P and the NASDAQ. Like, the company technically is listed on the NASDAQ, but it has absolutely no comparison could be made whatsoever when we're looking at the S&P and the NASDAQ. But, of course, they always like to compare it to the major indices for some reason. But shares were up 68%, while the S&P and NASDAQ were up 0.4 and 0.7% respectively. Shares skyrocketed about 3,800% so far in May. Again, mind you, this is a company that is losing tens of millions of dollars every quarter and produced 10 cars in the last 4 years and has screwed over every single shareholder, but it is now up 3,800% so far in May. The incredible move has only created about $72 million in stockholder value. Market cap starting the month was roughly $2 million. There you go. So, again, the company basically literally about to close its doors and then get saved by you guys. But again, I'm not trying to beat you up or bash the strategy. If you got in, you're up big, you made money, congratulations. We know that at the end of the day, that is the goal, that is the priority. So I can't knock you guys too much, but from a business perspective, it makes absolutely no sense in my opinion. Again, you just basically saved the zombie stock that doesn't deserve your time, energy, or attention. Investors tempted to buy for a quick buck should think twice. Traders, probably computerized traders, are firmly in control. Billions of shares exchanged hands this past week. There were only about 43 million Faraday shares outstanding. Turnover is incredible, and the average holding period is measured in seconds. In every trading Monday, trading volume in early trading Monday, trading volume hit some 300 million shares, meaning that theoretically each Faraday share changed hands 7 times in about an hour. Right? So that's what I mean. This is why, again, if you're up big and you're looking for the next leg higher up to $5, $6, wherever the heck you guys think the ceiling is, you know I am wishing all of you the best of luck. If this thing explodes, to $20 a share, maybe all of you will make hundreds of thousands and millions of dollars. And of course, I'm pulling for all of you. But each Faraday share changed hands 7 times in about an hour. What that tells me is the bulk of these shares, as we see, these are traders going in and out. It doesn't seem like the bulk of this volume is being bought and held for a potential higher and even higher breakup of the stock. So I just want that on record. Because again, if they randomly issue more shares, which of course they're probably going to do, and the stock just randomly craters and drops all the way back to like 20 cents, 10 cents, everyone's going to have the war story that they bought it at 38 cents and they were up 1,000%. They should have sold. Now they're down. What should I do? And unfortunately, again, as I said, not to beat you up, but if that happens, you may only have yourself to blame. That kind of trading is almost unheard of. Tesla stock has traded about 1 billion shares so far in May. Again, Tesla, big trader heavy stock, or about 1/3 of the shares outstanding. Traders aren't trading on fundamentals. Well, of course, they can't. They don't exist. There have been no analyst reports arguing in favor of the stock. Well, of course, they can't. There is no positive analyst or catalyst on this stock at all. Nobody would look at this company and say, I'd be a buyer. I promise you that. Not one person out there would say, I'd be a buyer of this company. Unless, of course, they got in at 10 cents and now it's up huge. So, of course, they're going to blow the stock. But the company still hasn't filed its annual report or disclosed its earnings for the fourth quarter of last year or the first quarter of this year. But again, this is the stock that just got pumped. And in its third quarter financial filing, Faraday said it had less than $10 million in cash. Well, that's an issue since the company lost over $70 million last quarter. So what does that mean? More cash has to be raised. What does that mean? Further dilution. What does that translate to? You getting screwed over and the stock going back down to pennies. The traders and the computers they've programmed, interesting way to put it, are simply trading the volatility. The best thing for investors to do is sit back and watch. I 100% agree with that statement. I'm sure there are people right now in this moment who may have who may have jumped in at $2.50, $3 a share. Now the stock's back at $1. So until the next leg of the random fake BS pump takes place, those people are screwed. And you may have potentially brought them in and influenced them to a potential future extra rally that may or may not be coming because you may have wanted to line your pockets a little bit more. Again, I always go back. Listen, Roaring Kitty, I guess I respect the situation. 10, 12 years ago when I was a broker, I noticed as well that GME at the time had a short interest of 106% of the float. And I remember bringing it to the attention of the analyst and the branch manager. And, it was kind of swept under the rug. And I'll be honest, if I was consistently making income, I may have actually taken a position in something like a GameStop and potentially expected that sort of explosion short squeeze to happen one day. However, it did take many, many, many years, so it probably would have been difficult to actually hold that position and stay the course, to be honest. But, hey, listen, they saw the anomaly and everyone piled in. Of course, remember, he took a massive position and then leaked it out online, right? So you all came in with your volume to actually help him make even more money because he was positioned well before you were, right? And then the same thing now with the recent GME quote unquote 2.0 short squeeze that just happened. He was already in at a significantly lower price. And then when it most benefited him, of course, he randomly tweets out, and for some reason everyone piles back into the stock, and then you made him another 500%. So just by sitting there and feeding off of your volume and your investment and your FOMO, that guy generated millions upon millions of dollars for himself by investing into what I feel is a dying company. Right? Because, of course, no one really goes to GameStop anymore. And, of course, the closing of locations and, the drop in revenue year over year, that all supports that analysis. But market cap basically back here at 50 million. As we see, there is nothing across the board. Oh, I'm sorry. Half a million was brought in last 3 quarters ago, whenever it was. I don't even know. Because they haven't reported in the last 2 quarters. Which, of course, in my eyes is a massive red flag. But, yeah, it's fine. If we look here, we can see the debt did come down over the years. But, of course, we have no 2023 numbers. And we have last numbers of Q3 of 23. But if we look, we can see Q3 of 22, debt was at 94 million, down to 68.5 million. Explodes up more than double to 134.6 million, down to sub 110 million. Back up to the highest it's been now for the last 5 quarters, up to almost 135 million. Free cash flow sitting here at minus 64.66 million. And the company going from almost 34 million in cash down to 18.5, back up to 33, back down to 19, now down to about 8.5 million. However, again, lost over 70 million last quarter that we know of, right? So we know that cash, again, is probably going to be gone and head heavily negative when they report earnings, apparently next Tuesday, but, they probably won't report earnings, which apparently isn't scaring anybody. But as we see here, short-term liabilities are outweighing short-term assets by about 200%, but long-term assets are outweighing long-term liabilities. The debt right now, 134 million. After the stock has been pumped and still above $1, the debt is currently 200% higher than this current fake pump market cap that we're currently looking at. So again, I'm just giving a heads up here. If the company does another reverse stock split after dipping down to $1, which in my opinion it should almost immediately, if they offer more shares and the stock tanks, if any of these negatives happen, again, in my eyes here, not to beat you up, you have no one to blame but yourself. But we can see that apparently revenue came in. Again, someone in Discord mentioned they sold 10 cars, but as you see, it cost them $66.5 million to do it. So, I'm not really sure, again, minus the squeeze, I'm not really sure what the appeal is here. The liabilities have basically remained stagnant. The assets are down about, 35% here over about the last year and a half. Who knows, probably lower now. I don't know, we're not getting reports. Equity down here. Dropped to 200 million, made a rebound. Now it's sitting at 261.8 million. Again, 135 million in debt. And apparently the book value per share, it says is $24. But of course, in my eyes, you can't look at that as it has been in complete free fall for years. And again, has recently gone on a rally, really for no reason, but as you see from the operating activities here, we were minus 100 plus million, and we did have some bumps here, and now we're back down at almost minus 80 million. The fundamentals, as we mentioned, are essentially non-existent. We really don't have any sales, but it's showing 17 times sales right now. We're trading 0.06 times book. Apparently the enterprise value here is 185.5 million, which of course would be like a 300% move from here, but that would bring us to about $3.50 to $4 a share, which we recently hit and then, rejected hard and started to pull back. So time will only tell if the stock goes back up to that level. But, in general, on paper, the stock obviously shouldn't be up this much. Our return percentages still look horrendous. Gross margin minus 4,000%, operating margin minus 12,000%, net margin minus 14,000%. Inventory turnover somehow started climbing, but then chunked down about 50%. There is no revenue, so asset turnover doesn't exist. All other fundamental metrics are dropping as debt increase, so our debt ratios are climbing heavily. The company, 4 misses on the EPS side, 3 beats, but again, we haven't gotten the last quarter or two, so who actually knows what's going on? Supposed to bring in well, first of all, we go back here to the second half of 22, which was probably their initial timeline, and of course they were delayed, just like Mullen, just like Fisker, just like Lordstown Motors, so they didn't sell one car and didn't produce anything when estimates were here at 10 million. So then we go back down to zero. We go back down to zero. Then we say, hey, listen, you should be at 1.75 million. Nope, we're still producing zero. 1.5 million, probably zero. And of course, Q4 23, 2 million, right? Zero. And for Q1 of 24, we're supposed to be up to 4.25 million. And then apparently exploding off of that number up 200%, and then bumping up off of that number 100%, and then bumping off of that number again another 70-80%. So, these are pretty impressive forecasts for a company that just loses tens of millions of dollars and hasn't done anything for 4 years. I am very impressed with these forecasts. For the year of 23, estimates were only down here at 2.5 million, but we know that they brought in, 500 grand. So they missed that by roughly 80%. And then apparently for 2024, the forecasts are jumping up to 85 million for the year of 2024. And well, we're halfway through that year now, and of course we haven't seen any data, and I could bet my bottom dollar they're nowhere near 85 million, so that's going to be another miss on the annual forecast. But yet somehow, some way in 25 we're expecting a forecast north of 610 million. And I remind you again of actually established EV stocks like your Teslas, your Neos, your Rivians, who have all been selling off recently and have all cited that 2024 will see lower demand for EVs, and they're all expecting weaker sales figures and lower earnings, right? But somehow Faraday Future Intelligent Electric is randomly going to flip the switch, and they're going to go from 0 to 100, and they're going to generate over 80 million and then explode to north of 600 million. And I'm sure someone's going to comment about some facility or some BS that they were dealing with, that now it's all okay. But again, at the end of the day, when it takes you 4 years to do business, and then when you finally do, you sell 10 cars. I mean, again, at the end of the day, there is absolutely no urgency for you to own this situation. If you want to sit there and say, wow, I wish I bought it at 4 cents, it went to $4, yeah, you can go ahead and say that. But again, if we turn around in a month and it goes from $1.12 back down to 4 cents, we know that would be justified, and then you'd see that it was just a short-lived moment. And listen, if you were in, you were in, and it was fantastic. But the average person, of course, was not in. And what these massive moves do is they suck people in at these highs, and then the average investor is the one that gets screwed over. But of course, the other average investor that already made money on it doesn't give a crap about you, because they got blessed with some BS random pump and they walked away, happy as a pig in shit. But at the end of the day, honestly, even if this stock runs to $12 a share, if you gave me $1 million, I would not touch a single share of this stock, because in my eyes, it is inevitable that this business is going out of business again, just like the Mullins, the Fiskers, the Lordstown Motors. All of these stocks are essentially useless, and it was a nice cash grab at the moment, and they screwed over, I can't even tell you how many investors. So, again, in the moment, I might get a lot of dislikes. People will probably say, oh, you don't know what you're talking about. Don't quit your day job. You should go, do construction or something like that. Yeah, listen, that's all fine. But just remember, if this short squeeze didn't happen, of course, the company would have been out of business. And I also got the same type of flack when I did videos on Mullen and Lordstown Motors. And of course, they don't exist anymore. So we know who was right with that analysis. But again, I'm not here to pat myself on the back. I just call it like I see it. If you literally wired me $1 million right now, I would not buy one share of this stock. That is a fact. That I mean, obviously it's my opinion, but you know, it's a fact in my mind, more of an opinion, but it is what it is. We switch over here on the weekly. I mean, look at these swings on these Bollinger Bands here. You know, usually when a stock, again, does two reverse stock splits in less than 6 months, that is a very bad sign. And when you don't get any sort of earnings releases or updates for the last 2 quarters, that is usually a very bad sign. I didn't even know that was legal, to tell you the truth, but you know, apparently it's all fine because the stock just went from 4 cents to $4. You know, usually things like this that make no sense to me personally, sometimes they continue to run. So, hey, if you're hanging on hoping for this 1570 move back up to the 50-day on the weekly, hey, more power to you. I wish you all the best of luck. The RSI was basically asleep, of course, since you guys got it trending on social media, which we know is where all the key analysts live. And we can see that the RSI here on the weekly sitting here at 37. The stock is currently above the fake reversed, in my eyes, the fake reversed top Bollinger Band. Now we're sitting above about 88.5 cents. Stock still here at 112. MACD basically asleep as well on the weekly. Let's switch back over to the daily. Whoa, look at that RSI. Let's see where it jumped up to. I mean, people always tell me, again, when I look at, you know, brand name companies that are actually doing business, people always try to throw the RSI in my face. Oh no, it shouldn't keep going higher. The RSI was topped out at 74. It had to sell off. It had to come back down to earth. Well, apparently not when you're talking about a zombie stock, right? Apparently we can take the RSI after exploding up above that benchmark of 70 and actually reaching the high 80s. Let's just take it up even more and take that RSI to about 98.5. Almost off the chart and now pulling back. But hey, because everyone missed the rally and then now is experiencing FOMO, well, now the RSI is back down in the 60s and it's below that 70 benchmark. So maybe everyone should pile in again and try to pump it back up to 150, 160. Again, I'm not bashing the strategy. I just personally don't agree with it and don't understand it. But if you do happen to step in here in the low ones, of course I hope it runs to the high ones and twos for you. Because in my opinion, again, this is a stock that no one should be watching or investing into. So if you do happen to step in and roll the dice, of course I'm pulling for you and hoping you make 30, 40, 100%, wherever the heck it goes. But if we look here at the daily, we can see the 200-day moving average, of course, was basically off the screen and up here at this overpriced cash grab zombie POS crappy stock and has completely fallen all the way down to $6.41. So again, in my opinion, I don't see it, but chances are it probably will go up to $6.41 for absolutely no reason. And of course, if you saved my company from going out of business after I stole millions of dollars and screwed over thousands of shareholders, yeah, I'd probably take the money and run here as well. And I would absolutely issue more shares, collect free money, help keep afloat my dying, pointless, useless business, again, that hasn't done anything in 4 years, that was about to get delisted. I would take the free money that you're giving me that I don't deserve, 100%. So who knows? You might see 641 here. The MACD actually showed some life because, of course, the company was dying and going out of business. So we started to see some life here. We got a little bit of a rising momentum taking place, but again, it really doesn't have anything to do with the fundamentals, and people are simply looking at the short interest, which I want to pull up here. What's the symbol on this thing again? FFIE. Listed on the NASDAQ for the time being. Short float, it's showing 97%. I don't know the last time this was updated. Shares outstanding 42.6 million. No, float 37.5 million. Short interest 36.3 million. So again, you know, you're essentially saving a dying business, and I promise you, man, you may jump down my throat, you may bash me for looking at it like this, I'm out of the loop. I don't understand what's going on. And of course, you are entitled to your own opinion. But at the end of the day, just remember something. Anyone who didn't get in down at sub 5 cents or even back here, sub 30 cents before it really exploded, anyone who got in recently is very upset right now. And they do absolutely, without a doubt in my mind, there is a 99.99999% chance that that person is going to eventually see a red position that is down 99.99999%. But again, that's just me. That's just my opinion. Let's check the pivot points real quick. Yep, and we can see we are just nowhere near realism here. Looks like we had all the way back here, early 24. Looks like we had an old pivot point here of about $1.57, which we can see technically just rejected off of recently and is now pulling back. But again, who knows? In the technicals, we might be forming a bull flag and we might pop back up to $4 a share. I couldn't tell you, honestly. Fake random pumps like this, I'll be honest, are not my specialty. But, of course, to each his own. Here we don't have any pivot points even on the screen. Probably not going to go back to $106 a share in my eyes, but hey, I mean, who knows? Who knows? Let's see something out of curiosity. How about if we check something like the VWAP here? Doesn't even exist. How about if we look at the daily? Nope, that doesn't exist. No, I wanted to see... What did I want to see? Let's check the money flow index. Money flow index. A little overextended here on the weekly. And of course on the daily, we topped out above 100 plus, it looks like. Now we've pulled back to 76. Oh, man. Oh, man. Like I said, I'm a lot of people will sit there and say, oh, this guy's salty because it went from 4 cents to $4 and he didn't know about it. He doesn't know what to look for. And I understand that point, and of course we all want to make massive percentage returns like that, right? But in my opinion, and I'm sure a lot of quote-unquote professional traders and investors on YouTube and other social media, chances are, in general, they would agree with me. Because buying into a zombie stock and just hoping and praying one day that it short squeezes, in my opinion, that's not a concrete strategy. And it probably in no way, shape, or form can it also be a consistent strategy. Right? Now, I do things a little bit different here on this channel. I do try to incorporate both some fundamentals and some technicals. But of course, I like to look at the numbers first because I look at the actual business like Warren Buffett does. And of course, people will immediately bash Warren Buffett. Oh, I make more than him. I'm a trading animal. I go 8 for 10 every week. And listen, more power to you. Again, if you found the strategy that works for you and it's consistent, I wish you the best of luck. I hope you make millions upon millions of dollars. But for me to bring analyses to your attention and do it in a similar fashion as a man who has over 80 years of market experience and is the most successful investor in American history, for you to kind of butt heads with me and tell me it's not the right way to do it, obviously, in my opinion, I just have to giggle and I have to move on from your comment because it really has no bearing. So again, I appreciate the fact that everybody wants to be the next roaring kitty and catch, 1,000 and 10,000% returns on short squeezes. And I hope that every single one of those positions you take in companies that you really shouldn't be in my eyes, but I hope that every one of those positions that you guys take explodes and goes to the moon. And I hope everyone is immediately able to retire. But of course, back here on Earth, back here in reality, what it really comes down to is, I'll remind you again, they surveyed the millionaires in this country and they wanted to see how they made their millions. And most millionaires in this country, the bulk of them were made from the stock market. So first of all, if anyone tells you you shouldn't be investing in the market and it's too risky, in my opinion, I would immediately block that person out and not listen to a single word that they say, because they're obviously just very silly and they're ignorant, right? So we know investing in the market is the place to be. That's where your capital, in my eyes, should be going. And whether you spread it out and diversify and potentially grab one or two hedge positions in your account as well, the way you do it is entirely your own prerogative. But to be sitting in cash, which is going down in value day in and day out, and to not take advantage of this growth to try to help generate passive income while you're probably still out there working, in my opinion, you're essentially shooting yourself in the foot, and you're probably going to lose the race. But going back, the bulk of millionaires in this country were made off the market. And the bulk of those millions were made in long-term 401ks and IRAs. And the bulk of that growth in millions was also made from compound investing into brand name stocks that were probably bought at fair valued prices, and then they did what is called the DRIP, the DRIP, which stands for Dividend Reinvestment Program. And of course, you can take a moment right now, you can go on Google or whatever other search engine you use, and you can type in, bring me up an investment compound calculator, and you can look at almost any stock, even one that bounces around, something like a weak telecom stock, like a Verizon that we've spoken about. Yes, the stock does have pops and drops. However, the company's still yielding like a 4 or 5% return or whatever it is. Or even if you want something more stable, look at something like a PM, a Philip Morris, which of course has just been an absolute powerhouse recently. But we can see that in my eyes, the stock is actually fair valued. And even after running up here to these new 52-week highs recently, 101.46, the stock is still at this level, sitting here with a sub 20 PE and a dividend yielding almost 5.2%. So the point of the story, bring up a compound investment calculator right now and, say that you want to put $1,000 or whatever every week or every month, whatever you can do, into something like a PM, and then have it reinvest those dividends, and then look at how much is going to be generated over a 10 to 20 year period. Does it sound like a lot of time? Absolutely. Are you going to see hundreds of thousands of dollars in capital gains and returns within a week or a month or a year? No, of course not. However, chances are, if you're still in the workforce and you're sitting there in your 20s, your 30s, your 40s, chances are you're probably still going to be working and looking at the market and looking for investments 10, 15, 20 years down the road. So if you're essentially quote unquote guaranteed to make significantly more by doing compound investing as opposed to chasing zombie companies and hoping for a 10,000% return, that then in my opinion, that's why I always say you are better off working smarter, not harder. And again, it did take a very long time, but my friend Warren Buffett always likes to cite the growth of compound investing when looking at a stock like Coca-Cola. And Coca-Cola, which of course has been around for over 100 years, but one share of Coca-Cola from IPO price years ago at the time when he mentioned it would be worth $4.5 million at that time. And obviously today, I'm sure it would probably be worth well over $5 million. One share of Coca-Cola at IPO today is worth over $5 million each share. So again, in my opinion, am I completely bashing your strategy here? Absolutely not. But also the point I'm trying to make is, if you're sitting there with a small account, or you're just getting going, or, you saved up, 10 grand, and you really can't afford to have it go down, but you're looking for a big play. In my opinion, you should be working smarter, not harder. And I implore you all to check out the compound calculator and look at what could potentially be coming 5, 7, 10 years down the road if you simply invest into these companies that pay you to own their shares, right? Because these companies need you. You don't need them. They need you. They need your capital. So that's why, in my eyes, to focus on companies that actually reward you and pay you back and help you out passively over the long term to be an investor in their stock, in my opinion, that is where the bulk of your capital, your energy, your attention should be going. But again, if you have $100,000 account and you threw whatever, $1,000 into something like this, of course, we both know you can probably take on that risk. I'm sure you can appreciate the fact I'm talking to a select group of investors and traders here. But I just went on my rant. That was my big hoorah, and that's pretty much it. So again, anyone involved in this one, congratulations. You don't deserve it at all, in my opinion, but hey, hats off to you. The strategy worked out once again. But as I said, if we begin to issue shares and reverse stock split and completely give this all back immediately, you can't be shocked by that move. And that's it. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Oh, also earnings, again, on this company that hasn't released earnings in 2 quarters. Maybe you'll see earnings next Tuesday, May 28th. And of course, the company is expected to lose money at $3.51 a share. And yeah, that $2 million. I mean, obviously we can all probably agree that they're not going to bring in $2 million. But hey, I mean, at this point, it really doesn't matter, does it? So that's pretty much it. But again, anyone who got in and caught the move, good job. Congratulations. I'm happy for you guys. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I appreciate the fact that markets are very rocky. They're very volatile. They're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day, guys.